Hi, everybody. This is Tim Melvin of Banking on Profits coming to you from down here in rainy, overcast Central Florida. Started raining yesterday, and they tell us it's going to rain pretty much all through the week as a way of saying goodbye to the dry season. We'll now be entering the rainy season with tropical storms, and in a few weeks we start hurricane season, and we get to have all the summertime fun of Florida living once again. Personally, I love it down here. Occasional hurricane. Not too high a price to pay so far since we've been down here for the lifestyle and the weather that we enjoy. Anyway, been a couple weeks. I told you I was sporadic with these things. Every time I promise to do better, I do worse. So we'll just do them as the mood strikes and when we have something to talk about. And of course, while we've been gone, it's been a busy time. We've had birthday weekend. We've had some travel. We had Mother's Day. So a lot going on. It's just been harder to get to the videos. But we did have the Berkshire Hathaway meeting, and it was fascinating, as always. I don't own Berkshire. I don't go to the meetings. I'm not going to travel out to Omaha to join the groupies. But I do, I do read the transcripts, watch the videos. There's a lot to learn from Warren Buffett and Charlie Munger. My particular interest is in how they got rich in the first place, because what they do to stay rich today doesn't have a lot to do with me. I'm not managing, $400 and some billion company, and I don't have $100 billion in assets in cash that I'm trying to figure out what to do with. I'd love to have that problem. Maybe if we stick to this someday, we can all have it together. But anyway, they're both brilliant investors. And Munger said a couple of things that really struck me as interesting and are probably the key to long-term investing success for most people. That, of course, is why nobody ever uses these two suggestions of Munger's. One, he said, one of the reasons they've done so very well over the years is that much of the time the right thing to do is nothing, and Warren's really good at doing nothing, of not making a move, of not rushing to invest that $100 billion cash that he's got on the books in a subpar deal. As Munger once said, he didn't get rich by jumping on mediocre opportunities. And then the other thing that he said, that another big secret to their success is they do less stupid things than everybody else. They're rational investors. They don't get caught up and let their emotions force them into things that they don't understand, companies that they don't know how to value, and just whatever's the hot topic of the day. Learning to avoid the hot popular stocks is difficult, but it is a key to investing success. Now, neither of them had good words to say about Bitcoin when they were asked about it. Munger used the word turd during the meeting, and in the follow-up interview with Becky Quick on Monday, the phrase scumbags came up when Charlie was asked about Bitcoin. Warren doesn't think that it ends well either. Bill Gates joined them on Monday for the interview with Becky Quick on CNBC, and he said that as fascinating as the technology was, he did not see a positive long-term result for cryptocurrencies either. Now, I get a lot of flack for this, but I happen to agree with him. I think the technology is fascinating. My son-in-law sent me an email this morning that a grain deal was just done using blockchain, but apparently not cryptocurrency, just the blockchain technology. And so there's going to be some uses in various industries, and I don't think that blockchain will ever go away. Pretty sure cryptocurrencies will, and here's why. I want you to consider the governments of the world and the central banks and the cryptocurrencies. Now, I want you to think about the Godfather, okay? And the government is the Godfather, right? The head of the mob in New York City. And he's sitting in his office of his olive oil company down in lower Manhattan. And one of the guys comes in and says, Godfather, there's some guys out there. They're, doing some deals, stealing some stuff in our territory. It's just a couple guys, but I thought you ought to know about it. Godfather says, okay, you go tell these guys, we're going to let them function. They got to pay me a little bit of my due, and they can't get any bigger. The guys, they go and they tell the smaller gang, which if you haven't figured it out is cryptocurrencies, say, look, you got to pay us or do. You can't get real big. If you threaten the Godfather, bad things could happen. Well, the crypto gang decides that they are smarter, better, faster, and more wonderful than the government. And they're so impressed with their own technology that they really start to believe this like gospel, and they even sell it to some other folks. And as they sell it to other folks, it gets bigger. And by the way, not only do they not pay the Godfather his due. They are teaching their disciples how to hide what they're doing from the Godfather so he gets less of his due from other folks as well. You guys see where this is going? Eventually, the crypto gang is going to get big enough, they're going to cut in to Don Corleone's revenues, and we all know what happens then. There's horses' heads, guys being shot on the courthouse steps, shot while taking a massage. There's just no happy ending. Once crypto gets big enough, it's not really even a medium of exchange yet. It fluctuates far too much for that. But once the crypto market becomes big enough or used enough to hide transactions and conduct illicit transactions, eventually one government or another, or several acting in concert, will step in. Boom, end of a serious cryptocurrency market. You have to be a pure anarchist and a bit of a fool to actually believe that the central banks of the world will stand back. What a great idea. You guys take this market and decide the value of our currency. Never going to happen. There'll never be enough crypto in circulation to be a serious threat to real currency. And as Munger pointed out, its really primary use is illegal and illicit transactions. And that's probably not really in anybody's long-term benefit. Don Corleone always wins. Crypto gang's going to go the same route as the Tattaglias and every one of the 5 families that tried to take Don Corleone on in the movie. That's what's going to happen in the cryptocurrency markets. One man's opinion. Now, one thing as I go out and about, and I've talked a little bit about crypto in the letter and on the videos the past couple of months, because when I get out and I'm talking to folks, and I've been traveling a lot and talking to a whole bunch of people, particularly younger people, they love cryptocurrency. They don't know what the hell it is or how it works, but they love it. So that I consider is a huge problem. There's a lot of people chasing crypto and talking crypto. They don't know what the hell crypto is. We have a solution. Good friend of mine, a good friend of the family's, in fact. My wife calls him her Iranian Jewish stepson. Omid Malikan up in Long Island, New York, got involved with cryptos pretty early. He's done pretty well with it. I've never said there wasn't money to be made speculating in cryptocurrencies. There is. It just ends badly, in my opinion. It doesn't really agree, but that's okay. He's also a Mets fan, so we love him in spite of our differences. But he wrote a great book, guys, and it just came out. It's called The Story of the Blockchain, A Beginner's Guide to the Technology That Nobody Understands by Omid Malikan. And this does a fantastic job. I think it's less than $10 if I recall on Amazon. Just came out. Omid Malikan, Malekan, The Story of the Blockchain. If you want to have at least a learned opinion, I don't care if you disagree with me, just know what the hell you're talking about. Buy that, read that. You'll know a lot more about the blockchain and cryptocurrency and how all of this works. And then read The Godfather, and you'll know that you can make some money in it in the short term, maybe, but it's really not going to end well. Anyway, Munger and Buffett, particularly Buffett, also made some references to investing in gold and other non-productive assets. I thought it was pretty cool and worth sharing. He talked about buying his first stocks, shares of City Services, back in 1942. And, the world didn't look all that great. The war had just started. Things were not going all that great for the United States. But, he made his first investment. He bought preferred shares of City Services. Actually ended up making a few bucks on it. But he said, pointed out that if you had put 10 grand in the stock market, he's just referring to the indexes, back in 1942, that money today would be worth $51 million as companies made things, sold them, paid dividends, bought back stocks, expanded, grew. Just, think of all the new technologies and new companies and growth that's happened since 1942. Been some pretty cool stuff. Your 10 grand becomes worth 51 million. Now, if you listen to those guys who looked around the world and say, that Hitler fellow, man, he looks like the real deal. He's going to overrun all of Europe. And oh my goodness, look at the Japanese. They control most of the Pacific. How are we ever going to be able to beat the Japanese? And this is just going to be terrible for the whole world. And you bought gold because gold would always be this great medium of exchange. Your 10 grand's worth about $400,000 today. You've actually lagged a little bit behind inflation. And Buffett also pointed out later in the meeting that the long-term total return on gold since the time of Christ was in a fraction of a percent. So all that about gold being this excellent store value, Never bought it, don't buy it, probably will never buy it. Really think that in a full global collapse, the two best currencies are tin, as in tin cans full of green beans, and lead, as in ammunition. But anyway, moving along, bank regulatory reform, it looks like we're going to get a deal. And Paul Ryan said last week that maybe even as early as this week or the first week in June, we could get that combined bill on the president's desk. It's going to provide regulatory reform, particularly to the smaller community banks. It should lift the systemically important financial institutions limit up to $250 billion from the current $50 billion, and that opens up a whole new area of takeover activity in, let's say, the $20 billion and below sector of the community bank industry. So we're pretty excited about that. And as we look at M&A and how it's developing here in 2017 or 2018, we like how it's developing. We've had 7 deals, triple-digit winners so far this year, so it's hard to be really unhappy about that. But really the focus now is on technology and deposits. Deposit pricing is critically important right now. And as rates rise, it's going to become even more so. So being able to buy low-cost core deposits, which, by the way, here you're talking about smaller banks, more rural banks, less urban areas. We've got a whole portfolio full of those things that we're willing to sell at the right price to deposit-hungry bigger banks. And the other thing is technology. The big banks have a huge technology lead. They have the scale to be able to go bigger, better, faster. Smaller banks, it's not as easy. They have to work harder. There are ways to do it. However, most small bankers also do not have the technology expertise and exposure. And just like with any technology, there's a lot of bad actors out there, and it's hard to sift through the good and the bad. So the smaller banks are at a huge technology advantage. A lot of the ones I've talked to over the last few years cite that as one of their number one reasons to consider selling the bank. They do not feel they can keep up on the technology side. So anyway, seven deals this year with triple-digit gains. We think there's going to be a lot more coming before 2018. So you got it right that time comes to a close. Now, we've been testing some returns, having some fun. It was raining down here, as I said the other day, so kind of hiding out in the office. If you just invested in the top 5 holdings of the top activists over the last 10 years, you would have a total return that's about 2.5 times the S&P 500. Now, what's cool about that is we've been at this less than 5, and we're way ahead of that pace. Okay, we've been pretty much crushing the market. Our bonus banks are doing so by even wider margin. For those of you that have participated in these smaller, actually tiny banks, much less liquid than the main portfolio, which is a huge statement because the main portfolio is not all that liquid. We make our money in illiquid stocks. We don't make any bones about that. It's not a big secret. We buy small illiquid bank stocks. The bonus banks are the smallest, less liquid of all. Naturally, they provide a much higher return over time and a much higher takeover rate as well. So we like our approach, going in, buying undervalued, underperforming banks with a high degree of conviction that somebody's going to come along and buy them. And as long as we make sure the banks we buy are financially sound, we can afford to wait until that does in fact happen. Because there's one or two things that's going to happen. They're going to get better. They're going to fix things. They're going to turn things around. They're going to get an industry average or above return on equity or return on assets, or they're going to sell the bank. Usually it's going to be the second because it's very hard to achieve the first without gaining a whole bunch of scale. We've seen some banks do it. They did it by little fish eating littler fish, then eating a slightly larger. In other words, they also grew by intelligent acquisition, by buying banks a little bit smaller than themselves until they had the scale to compete for deposits, technology, and to cover regulatory costs. Either way, it's a win-win for us. I like to say we keep ourselves at all times in a win-win buy situation. If the economy heats up and interest rates go higher, fantastic. So does loan demand. So does our interest rate spreads. So does the currency price that can be used to make acquisitions. Loan demand goes up, profits go up, dividends, stock buybacks, all that cool stuff happens, and we win. If it stays right like it is, 2% growth, 2.5% growth, low interest rates, tough environment for banks to grow organically, going to be lots of takeovers, and we win. If there's a recession, things fall off a cliff and we go back down, into negative growth and bank prices take a fall, well, that's time to buy. So small bank investing. It's win-win buy. It's worked very well for me over the last couple decades. I expect it will continue to do so. Anyway, noticeable on the, or memorable, I guess I'll say, on the reading front, did finish Walter Isaacson's Ben Franklin. If you've never read it, read it. I think he may be the greatest American of all. He's certainly the most entertaining and interesting, in my mind, of the founding fathers. And there's some real insights into what makes America work, why we were born in the first place, and where we may be going, and how Ben Franklin helped shape that back in the 1770s. So anyway, highly recommended by the book. Also just finished King Icahn. Carl Icahn does what we do, right? He looks for underperforming, undervalued companies and looks to sell them when either performance improves or there is a sufficient takeover target. He's just a lot nastier about it than we are. It's a great story, fantastic read. It's really cool and interesting in that he started off arbitraging and doing activist stuff with closed-end funds, which is an area where I still have some interest today. And recently taught that to my son-in-law, and he's just enthralled with closed-end fund activist investing these days. So